My name is Michelle Stickles, and I will be your moderator for today. We'll be starting very shortly, but just a reminder to everyone that if you have a question, simply type it into the chat box at any time during the presentation, and we'll get back to you during our Q&A session at the end. Your questions will remain private from the audience. Today, we're very excited to have Summer Ireland discuss how alternative investment firms are making use of cloud accounting and also present her real-world experience with a multi-billion-dollar hedge fund who recently implemented just such a solution. We also have with us Bruce Klein, who leads the New York office financial services practice for cross-country consulting. Bruce, I'll hand it over to you now.
Thanks, Michelle. Hi, everybody. I also wanted to thank all of our attendees for taking the time to listen in today. Just a quick introduction to our firm. Cross-country consulting, we're a 150-person financial services-focused advisory firm. We're based out of New York and the Northern Virginia, Washington, D.C. area. The types of projects we deliver range from business process analysis, technology selection implementation, as well as finance and accounting support. In the alternative investment space, we're often told by our clients that they need many of the sophisticated financial capabilities of large companies, but they operate in a fast-paced and lean environment. They just can't afford the time and cost of a large financials package such as PeopleSoft. At the same time, these hedge funds and private equity firms are finding that the basic packages they're currently operating on, like QuickBooks and Great Plains, don't provide the rich set of consolidation and reporting features that are needed, resulting in many long nights for the finance team. We've had great success implementing low-cost, cloud-based accounting software for these types of firms. And the goal today is to get into the types of challenges alternative investment firms face on the corporate accounting side, discuss how cloud accounting has solved these issues, and then go through an actual case study and demo of one such solution. With that introduction, I'll hand it over to my colleague, Summer Ireland. Summer is a CPA who's a subject matter expert in the corporate accounting needs of alternative firms and has significant experience implementing cloud accounting solutions for these firms. Summer, please take it away.
Thanks, Bruce. Above anything, one of the greatest challenges that most corporate accounting groups in this space face is time. There's always competing priorities to close the next fund, present investor information, respond to audits, all in addition to the day-to-day responsibilities. Spreadsheets are virtually used for everything, which poses a greater risk for inaccurate data. In a multi-entity environment, consolidations are typically performed manually, which means tracking all intercompany related entries and hoping they zero out at month end. As expenses come in and can be allocated and billed to the funds, most legacy GLs or fund accounting systems are not suitable to track these types of expenses. So again, Excel files are kept to maintain all fund-related expenses. If a company has foreign offices and requires to translate the financials at month end, you are likely calculating the cumulative translation adjustments in Excel. Tracking when and how the realized foreign exchange gains and losses should be calculated is tricky and often done incorrectly. Best case, your legacy accounting system has multi-currency capabilities, but even then you're likely still required to upload and maintain the exchange rates manually. Which leads us to our next topic, technology challenges. Alternative investment firms typically have multiple technologies to manage their business, but there's often little integration between the systems to provide any meaningful information. The accounting department is then often tasked with gathering data points from numerous sources to package information for investors, executive management, and operational areas of the business. This requires a lot of manual extraction and data manipulation to produce an Excel-based report. And for the information to be meaningful, these Excel reports must be timely, which means usually working additional hours on top of day-to-day responsibilities to get it out quickly. Most legacy accounting systems don't have adequate reporting tools to help automate this process. Further, hosted or on-premise accounting solutions requires ongoing maintenance and upgrades. Software version updates, fixes to bugs, server downtime are all examples of IT-related issues that require an in-house IT staff or ongoing consulting fees. Come audit time, there is often additional work required because the IT control environment is just insufficient to rely on, which typically translates to higher audit fees. Here is an example of a common IT environment for alternative investment firms. What you see is a set of disparate systems with no way to bring the data together except with spreadsheets. For private equity firms, portfolio company data and valuations are typically not standardized and kept in unsecure spreadsheets, prone to data corruption. Hedge funds often get their third-party admins to send data in Excel format. CRM systems house investor data, and the fund accounting system has its purpose, but there really is no ability to create automated reporting or real-time financials even with all of these systems in place. So how can cloud accounting help? First and foremost, a solution like Intacct provides comprehensive GL functionality and comes with a robust reporting tool. This enables efficiency and visibility into operations through automated dashboards and real-time financial management reporting. With user-defined dimensions, basic investor data can now be included in the GL for reporting, and access to the CRM tool can be reserved for the business users who need it. A cloud accounting tool is not intended to replace your fund accounting system or third-party admin function, but data can be incorporated and brought into the GL for integrated reporting needs. We have seen an increase in the adoption of cloud solutions for portfolio companies because they can be implemented quickly and cost-effectively, making it a powerful tool for private equity firms looking to build value in short order. It can also be used as a repository for valuations and reference data. All right, now we will walk through a real-life case study of our client, who is a $5 billion hedge fund with offices in the US, UK, and China. They asked us to help advise on a selection and implementation of a new technology because their existing system was just not meeting their needs. They were operating on an old version of Microsoft Dynamics SL, or more commonly known as the old Solomon system. The accounting team of 2 had to consolidate 40-plus entities with multi-currency, intercompany transactions, none of which their system could handle, so they had to do it all in Excel. As you can imagine, this created translation errors, the inter-entity balances didn't balance, and they were only able to keep up with their accounting on a quarterly basis. The current system had no allocation functionality, and the subledgers were not integrated, which meant they couldn't produce any aging report for even outstanding AR or AP. There was virtually no real-time reporting or visibility into operations, and they're at risk for failing their upcoming audit. To get basic functionality to meet the needs of a multi-entity, multi-currency environment, even their existing system required a significant upgrade. In approaching this engagement, we leveraged our technology solutions methodology. We first gathered requirements to understand the nuances of our client's business and what their must-have functionality needs were. For our client, this was multi-currency capabilities and automated consolidations, intercompany eliminations, and allocations. They were a lean accounting department and didn't want to increase headcount, so they needed to improve efficiency through automation. Their key decision boiled down to whether to upgrade their existing on-premise accounting system or move to a cloud-based solution. We discussed the pros and cons of each, including the time and cost of upgrade versus a new implementation, the level of IT support required on an ongoing basis, and the level of automation and functionality each system would give them. The final result was that the total cost of ownership to move to a cloud-based solution was more cost-effective than upgrading their existing system, and they would actually receive more functionality. The clear benefits of the cloud include easy access to your data 24/7 by logging onto the internet. Cloud providers house your data for you, so there's no need to maintain costly servers in-house that frankly pose a bigger risk because, let's face it, most companies don't keep their servers in a fireproof, waterproof room with a redundant server maintained off-site, backed up daily. Cloud providers have a comprehensive disaster recovery plan in place that guarantees no disruption to your data in the event of an emergency. The second key selling point for embracing cloud technologies is the fact that they're configurable, not customizable, so coding knowledge is not necessary. We train our clients how to maintain their own systems so they don't need to rely on us for system admin type functions. Upgrades are delivered automatically 2 to 4 times a year, so you can continuously receive enhanced functionality instead of waiting for an upgrade to come every 3 to 5 years or even more. Finally, many cloud solutions are picking their sweet spot and specializing as a best-in-breed package, so you no longer have to settle for an end-to-end software that has breadth but doesn't necessarily have strong functionality in any one area. APIs make it seamless to integrate with other cloud-based solutions so you can pick and choose the right package for each functional area of your business. The recommended solution for our client was Intacct. It's a cloud-based accounting solution with over 6,000 clients, and we were able to implement it in under 3 months. The out-of-the-box functionality included automated foreign currency translation, automated global consolidations with a click of the button, integrated subledgers with instant drill down functionality, enhanced dashboards and reporting capabilities, and the reporting tool delivered more insight into operations by using dimensions, which we'll get into in the demo. But an example of this, we were able to build reports that showed distributions by owner, expenses by department, and gross profit and expenses by fund. So with that, I'll get into the actual demo of Intacct. So as you log into Intacct, one of the first things that you'll see is you come into the product updates page. They release quarterly releases to upgrade your software. So anytime a new functionality comes into play, they give you a lot of advance notice, and so you'll be able to read it here and even go in and review the recent product news and see the release notes. It's very intuitive and easy to navigate, so those on QuickBooks find it an easy step into Intacct because the old developers of QuickBooks actually designed the user interface of Intacct. And the first thing that you're really going to love is, as you notice when you log on, you get logged on to what we call the root entity or the top entity. And with the multi-entity environment, you no longer have to maintain multiple versions of single instances of software for all of your various entities. It's all housed in one console, and it's literally the click of the button, and you are now in each of your individual companies. You can have as many open as your browser will allow, and you can go back and forth quite easily. The nice thing about the multi-entity environment with a cloud-based solution as Intacct is you have shared access to all of the data lists. So you have one chart of accounts, you have a set of dimensions, and you have entities and users. So as you add entities, it's literally the click of a button, and you can add a new entity in a matter of minutes, and it has access to your chart of accounts. The same users, you can restrict them based on entities, and it has access to all the same reports and dimensions, so there's no need to keep rebuilding that for any purpose. So as you add a new entity, again, we're in a multi-currency environment, so you can add it in any number of currencies. Intacct has a daily feed from an exchange rate provider called Owenda, and so what that does is it brings in the daily exchange rates, and so as you're transacting, it's able to recognize what the base currency of the company is, and that in terms of what the transaction currency is, and automate real-time what the exchange rate gain or loss is, or the conversion between your foreign currency and your base currency. With the inter-entity setup, again, you can choose to default all of your inter-entity receivables and payables. You can also see which entities you want transacting with which entities and to eliminate the consolidations. This comes into play when you're running the Global Consolidations module. With Intacct, there's a corporate view. It's based on a flat structure. So in most legacy accounting systems, you really have to build the reporting tree. You have to be thoughtful of how your entities roll up. And as your legal entities change and your GL entities have to shift, it often makes it cumbersome for a system to be able to handle this. With Intacct, you can define multiple consolidation books, and because it is a flat structure, you can define and roll up a subset of books. You can roll up the entire thing for GAAP purposes. You can split it off and restrict the inter-entity between a subset of books to the right and a subset of books to the left. And you can define consolidation books in any currency that you want. So right now, this consolidation book has been set up in US dollars. You can bring in your consolidated budgets as well, and it pulls the daily rates from Intacct, and you specify how you want to translate your balance sheet and your income statement accounts. And so this is all done with a click of a button. Any of your cumulative translation adjustments are posted to your retained earnings accounts, and any realized gains or loss will hit your P&L. With Intacct, again, as you add entities, it takes 2 minutes to add. You have an entity, and it's a matter of coming in, editing your consolidation book, and the entity will be added. So it's really at the click of a button. And then as you want to do any drill down reporting, any reports that you define at the highest level, you have access to at a consolidated level, at a subset of companies, or on a standalone basis. So let's say, for example, that you have a group of companies that you want to run and auto-eliminate the do-to, do-froms between the companies. As you define a consolidation book, you can do that, and the system knows to eliminate those do-to, do-froms. But then say you want to just produce a standalone report and show that intercompany do-from outstanding, the system, again, is smart enough to know those relationships and to leave it outstanding if the inter-entity relationship has not been defined. Again, getting into consolidations, everybody knows in the legacy accounting systems that you're clicking into each single instance of the environment, exporting the financials, the trial balance, usually to Excel. You're doing the mapping, and then you're rolling it up, posting your eliminations automatically. In Intacct, you click the button, you hit consolidate. This is where it pulls in exchange rates, so you can see which entity is in a foreign currency, what the ending spot rate is at, and the weighted average rate, and that's denoted by how you've defined your consolidation book setup. By clicking consolidate now, you have summed up all of the company's balances. You have calculated the foreign currency cumulative translation adjustment and posted it. It's calculated all of your realized gains and losses, and it's also eliminated your do-to, do-froms between your receivable and payable balances, all with one click of the button. Now we keep talking about dimensions. So Intacct, historical legacy solutions, you have a segment-driven chart of accounts. So you have your natural chart of accounts, the 1,000s for your cash, the 1,200s for your receivables, and so on and so forth. But every time you wanted to add an additional dimension to get a different view of your reporting, you were building that into your chart of account dimension code. So, to give you an example, we had one client who was a specialty lender, and they wanted loan level details in their financials. They had over 55,000 rows of chart of accounts. We were able to redesign their chart of accounts, bring it back to the natural base, and have just over 300 chart of accounts by leveraging dimensions. Dimensions at its basic form are tags for your financial data. So there are 7 out of the box that Intacct delivers: customers, vendors, employees, departments, locations, class, and projects. In this scenario, we've actually repurposed the class dimension to be a fund dimension. So again, historically, as you bring on new funds into your environment, it becomes really cumbersome to build that into your reporting or any sort of analytics, so you're often pivoting in an Excel-based environment. With dimensions, you can leave your chart of accounts as is, and with a click of a button, you can add a new dimension. And it is ready to go for any transacting. So as you go in to, for example, put in a bill, you have all of your dimensions available to you. And for example, if we wanted to post in a multi-currency environment, say we're in a US-based entity, or rather, sorry, a US-based entity, and we want to post a Canadian invoice that we received for the company, Intacct automatically pulls in what the daily exchange rate is at the time of the transaction. Okay. And vendor is one of your out-of-the-box dimensions, so you can pick all of your various dimensions. So if you wanted to get now your expenses by vendor, you can do that with dimensions. You can tag it to department, to location, and expand this to show details and tag it to any of number of the out-of-the-box dimensions. So now what that gives you is enhanced reporting capabilities. So as you go into your reporting, you no longer have to pivot. If you want to view your investments by fund, you now have a report that shows each of your funds, how they've been allocated. You can show your investments in subsidiaries and set those up as their own unique dimensions. You can set up your equities as their own unique dimensions. And as you transact, you can have quarterly data. The report writer is very intuitive and easy to use, and so once you get the hang of it, you can really calculate period differences, period variances, expand by dimension. Say on your balance sheet you want to have a mix of accounts. You can expand your cash accounts by account, but then your investments, you want to view those by dimension. That's easy to do. Intacct, as part of one of its newer releases this year, issued conditional highlighting. So you can set rules that say, show me anything that's increased by more than 10%. And highlight that in green. Show me anything that's decreased more than negative 10%, highlight that in red. This allows your accountants to spend more time on meaningful analytics instead of transacting and processing data. And with Intacct, again, any view that you have in reports, you get instant drill down capabilities. So this will take you to the general ledger view, and if you want to go down into the next level, you can drill down into the actual transaction itself. This is very powerful for audit purposes. Each transaction is sequentially numbered. There's a last modified date by, who it did by. We can build in workflows so that as there are changes and somebody submits a journal entry for approval, it'll route electronically to the person who needs to approve it before hitting the general ledger. It also maintains all of the historical data of that, so for each transaction you post in the system, you can tell who posted it, who approved it, and if there were any modifications, when, who did them. With Intacct, they have a very robust security framework, so we can go in and build restricted access by users and by roles. So if you have a small accounting department and maybe segregation of duties isn't exactly achievable, we can still go in and define by user which access you want them to have and how, whether it's read-only, edit, delete, reverse, so that you can insist that all of the transactions are reversed and maintain their audit history. Further, we can build in workflows by journal entry type and get down to that level of detail. So say you have a group that does all AP bills and you want all of your AP bills to be going through a workflow by expense threshold, and you want that to go up the chain to 2 different people. We can define that on an expense threshold level basis. If you're doing journal entries directly to the system, we can even define user-defined journal types that route for approval. So again, there's a lot of flexibility, a lot of options. You can build custom reports that are out of the system to show any and to support all of your audit. Okay, now your income statement. Again, with dimensions, you no longer just have your basic management fees, incentive fees, investment income. You can expand that by dimension and get more visibility into your operations with quick indicators in terms of what's being done. If you have expenses by department, you can define what those departments are by dimensions and set them up. So as you put in your salaries and wages or your fund-related expenses, you can tag it to the various departments and track where your marketing costs are being incurred. Now, we've talked a lot about financial data. Intacct's also very powerful in its non-financial data, and it allows you to incorporate other data from your system. So this is an example of a dashboard that we've set up and data that we've imported for the purposes of a private equity firm. Assets under management are incredibly important for all types of alternative investment firms, you can have that in a central repository so that you can see how it's appreciating, what's going on, how that's happening. Dashboards are customizable by role, so if you want your CFO to have access to a real-time dashboard to always see what's going on, you can give him access here. Now we've talked about dimensions. Here's an example where we've leveraged the location dimension for a private equity firm to tag all of their portfolio companies to. Now, as you guys know, your strategies change over time. You call them different things. At 1 year, you want to view it by industry, so you want to view education versus healthcare portfolio. The next year, you maybe want to view it U.S. versus international investments, or maybe you want to do that all at the same time and you want to have all of those options available to you. Dimension groups make this really easy. So as you're tagging your data to the lowest level of dimension, you can roll up any dimension to a dimension group, and you can report on any type of dimension group. So if, depending on how you view your business, we can design dimension groups and build reports around that. Again, with dashboards, they don't have to just be numbers for the non-accountants out there. You can build them, using trends, and then it easily converts to numbers if you want the data. Here's an example of portfolio value where you just really want to see a quick view of your cash received versus unrealized value that might come from an Excel file or maintained externally, but you want it all together. Private equity firms often have to report on portfolio company headcount. Usually you're reaching out to the individual portfolio companies, getting that updated on an ongoing basis. This really, with some standardized processes, if they provide this information, or better yet, even have an instance of Intacct to do all of their internal reporting, this is all automated. So with that gives an overview of Intacct at a high level, some of the consolidation functionality, the multi-currency, the reporting and dashboard capabilities. So I'll hand it over to Michelle.
Okay, that's great. Thank you, Summer. Thank you for both the demo on Intacct and the presentation on cloud-based solutions. From all of us here at Cross Country Consulting, we hope that you enjoyed the webinar today. If you'd like any more information about anything that you've heard today, please do not hesitate to contact myself, Summer, or Bruce. Following today's webinar, I'll be sure to send out an email with our contact information listed. In the meantime, we have received some great questions from several of you, so we'll use the remaining time to open up the forum to Q&A. And just as a quick reminder, simply type any of your questions into the chat box. Okay, Summer, the first question we have is, what options do I have for foreign exchange, and how does that work?
Yeah, great question. So Intacct, as part of your subscription to Intacct, it subscribes to Awanda. Awanda is a global resource for exchange rates, really well used, and it provides Intacct with a daily interface of daily exchange rates. And so with those, you also get your month-end spot rates and your monthly average rates to do all of your translation. Now, in this particular hedge fund, they actually had the Chinese local authorities wouldn't allow them to use Awanda. They had to use the local currency rates. So with that, you can also maintain custom exchange rates, and you can override the system-driven exchange rates to meet the individual and local regulatory requirements of whatever country you're operating in.
Okay, great. Thank you. The second question we have, can you show us in Intacct the allocations tool in the accounts payable module?
Yeah, absolutely. So with Intacct, and I'm happy to take this one offline, but you can define a number of allocations. And so allocations can be defined on both a percentage-based and a dollar-based. So as you are inputting a bill and assigning it to a vendor, every input screen has this allocation feature. And so what this does is it allows you to simply do a drop-down menu, And say, for example, you have an overhead expense that you want to split 20% across 5 different funds. You define that in the allocation tool. You can also do it manually. So here's where you can go in and define your allocation splits. So if you have a transaction amount and you want to input it and say $100 gets posted to operating company 1, or 1,000, sorry, to foreign subsidiary 2, and so on and so forth. We can also add to these allocations so that it's not just location and department, but it also includes your fund dimension or your class dimension, your vendors. Depending on which screen you're in, we can customize those allocation tools for you. And so as you post the transaction, it will do that allocation for you. And as you run the trial balance, you will see in each, and you run the individual trial balances for each local operating company, you'll see that amount show up in the allocation amount you specified.
Okay, great. Thank you. We have 2 more questions, but feel free to keep them coming. Okay. Can we put parameters or validations for the inbound data into Intacct? For example, can it restrict data into the system that has not been validated?
Yeah, absolutely. So within Intacct, on a transactional basis, there's out-of-the-box functionality to build workflows. So by module, we can build in customizable workflows depending on dollar amount for expense thresholds, by user-defined workflows, and then if you're integrating with other systems, again, that's usually built into the interface, but APIs make it really easy to even define staging tables to bring in external data to review before you even get it into the general ledger.
Okay, great. And back to the allocations. Can you import allocations that are 100 line item allocations as opposed to doing it just one by one?
I've never tested that specifically, but I am fairly confident you can. We've never had any issue with rows of transactions. The only time we've come up with a limit capacity is when the Excel file or the CSV template wasn't big enough to import over 56,000 rows of data. So that's, if it can import 56,000, I'm confident it can do 100 rows of allocations. And again, if you know that those are going to be always the same percent allocation or a dollar threshold, we can define that in an allocation template so that you can just select it every time. Worst case scenario, if it's based on assets under management that are continuously changing on a month-to-month basis, the easy solution is there's a lot of, we can define templates for you so that you can just download a template that has all the allocations specified for you. You can input the dollar amounts very quickly in an Excel type format, upload it into the system in a CSV format, and it takes a matter of minutes to post. Seconds, really.
Okay. We actually have a couple more questions. The next one we have, how many dimensions are possible beyond the 7 out of the box that you listed?
Yeah, so Intacct has unlimited number of user dimensions. So if you want more than the 7 out of the box, you can buy them in packages of 3. They are $9,000 per package of 3. So typically we find that most of our clients are happy with the amount of dimensions with the 7 out of the box. We have had one client who did need the additional 3, so they did subscribe, and again we're able to incorporate that into all of your transactions. Typically, if you're getting beyond 10 as a best practice, keep in mind too that also requires a lot of data input initially, so there's always that cost benefit. But certainly if there's a business need for that, it can handle unlimited user-defined dimensions. And then you can also look at integrating with another best-in-breed solution, focus on enhanced reporting, such as a host analytics or type of budgeting and forecasting tool. That's typically where we see the need for more dimensions, and those systems will give you a lot more flexibility. But typically we find most of our clients, we've been able to use the 7 out-of-the-box dimensions.
Okay. I see that there is a time and expense module. Does Intacct interface with Concur?
It does. So Intacct has an automated integration with Concur. And again, this is a great example of best-in-breed solutions working seamlessly together. Intacct's out-of-the-box time and expenses is not great. You can do expense management but it doesn't have the mobility for taking pictures of your receipts, whereas anybody on Concur knows that that's the creme de la creme of expense management tools and travel booking. So architecturally, Concur and Intacct are very similar. They both have the natural chart of accounts with the dimensions, and so it really is a one-to-one mapping. So if you already are using Concur or you plan to use Concur during our design sessions, that's something that we take into consideration, so we can make sure that we're setting up both systems the same so that it really is a plug-and-play integration between the two systems. And then it's really up to you to depend how you want to bring the data over, if you want the approvals to be done in Concur or in Intacct. You can also, with Concur, the nice feature is the expense types. So as you define expense types, those are great for a user who doesn't know what your chart of accounts are, and so all they care about is that they incurred a lodging versus a office supply expense, and so you can define expense types that map to your chart of accounts on the GL side, and then it just integrates and brings it over really easily into Intacct.
Thank you, Summer. That concludes the Q&A session as well as today's webinar. For everyone who's still on the line, thank you so much for staying with us till the end. If there's anything at all that Cross Country Consulting or the Intacct team can help you with, please do not hesitate to contact us. As I mentioned, we'll be sending out an email with our contact information following today's webinar. Thanks again and have a great day.